listen-only mode.
Okay. Hey, George, you there?
Yes, I am.
Is my screen showing?
Not yet.
Okay. Available only to presenters. You know what? I think we turned on my other machine. All right, let me see here. Hey, everybody, it's Jeff Scott. If you can hear me, we're just little. Let me just see where we're at here. Staff. You know what? I think make presenter. Okay. All right. Now you'll be able to see mine. Can you see my screen now, George?
Yep, I sure do.
Okay. Good morning, everybody. It's the first time I've done this at 9 o'clock in the morning, and it's nice to see people here. Can people just type in yes? Up. I see it here. Good audio. Great, great, great. Let me make this bigger so I can actually see the question box, because right now it's pretty small on my computer. All right. So it is about 9 o'clock, and again, as I was saying, this is the first time we've done this in the morning, or I've done this in the morning, so it's kind of exciting for me. I'm glad that you guys are here, and hopefully we'll have some fun. Now that I'm not working full-time, I guess I could say now that I'm not working part-time either, hardly working, I've had a lot more time in the market during the day. So what I wanted to do this morning was sort of walk you through a little bit of where I think the market is, to show you what I do in the morning before it opens, and then to do some Q&A and see if there's any stocks that look like they're going to be breaking out today and giving us some interest. And you know, I'm a huge fan of HGSI. Since we're in the market during the day, we'll probably be using other programs as well. But all my prep work and all the work that goes into my nightly calls come out of HGSI. I know the resolution for some of you is small, but I didn't want to downgrade my machine for this program, because I have machines with bigger fonts, but for what I'm doing today, I want to have all my stuff. So I don't know how many of you looked at the video I put up last night, so this won't be repetition, but let me just go through some of my top line thoughts. You know, it's interesting. You know, one of the other interesting things I recently got, and I can't believe that as somebody who's been investing as long as I have, I've never looked at it before, is I decided to finally see what this stock market almanac is all about. And I actually bought it, and I subscribed to the website. I mean, most of you are not surprised that I subscribe to something. It's actually pretty interesting, and it talks a lot about cycles and seasonality from a big picture perspective. And according to them, we got the Santa Claus rally, although it was kind of petrid when you look at the actual amount, but we'll look at in a few minutes. Disclaimer, education purposes only, and I've actually paid for everything that I show you at some point. And you know, I'm a homer for HGSI. People complain I try to sell it too much, which is kind of funny because I'm only a friend of the family. But to me, it's the product that I use. So here's the one thing I am going to sell. There might be two things. So I have about 5 slots left for my meeting. I've designed this meeting to be complementary to the PV meeting. I always think that the PV meeting teaches us, you know, the what and the why, and I want to move it to the how and the when. So how to trade, when to trade, and what things to trade with. And so I'm partnering with my buddy George Lee. Chris White will be there as well. And it's really about how to find great stocks and how to trade them. And we'll show you the agenda in a second. The fee structure is not designed to be complicated. I've got enough people to cover most of my costs, so I reduced the fee to $500. That includes dinner Friday night, breakfast and lunch Saturday and Sunday. $750 if you want the Tradestation indicators that you'll see today included, and if you come with your spouse. And same sex or different, we have no prejudice here. It's $850. And George and I will be making sure that everybody is able to do everything that I'm doing, and he's doing in Thinkorswim on their machines. And the agenda really, on Friday night, it's going to be, which I know is Valentine's Day, talk about bad timing, but I've got an understanding wife, and I think she's going to have a wives' dinner while we're having our dinner. Friday night's going to be setting up your tools, making sure that everybody's at the same point with the scans built into Tradestation or Thinkorswim. Second part, which will probably start on Saturday morning, is using those tools to find setups, find stocks that are attractive. The next part will be, once you've found stocks that are attractive with scanning, when do you trade them? I probably spelled trigger wrong, but I looking for different types of triggers, whether they're opening range breakouts or whatever you use, and then trying to apply rules of money management. George Lee and I are totally opposites. I buy high delta options almost as stock replacement. He buys lower delta options as a more speculative play. I probably get more hard dollar return. He gets a much more impressive percentage return, and we'll talk about our different approaches. Then we want to spend time about what we do each night to get ready, and then the different tools that we might use to track performance. Anybody that's been on my webinars knows this slide before, and this slide actually is extremely important to me because, you know, the man himself, one of the first things he said to me was that he's not a guru and that he's going to teach us to be our own guru. And I got to tell you, that's one of the most profound things that anybody's ever said that I've listened to, and it's true. And the point, you know, what I've learned is to find smart people that I want to emulate, and then build my own style. So Ian and Ron, obviously we all know them. Alexander Elder. I'm actually going to their Spiker reunion in March. It's things you get to, or May, I think it's March, maybe it's May. Things you get to do when you're semi-retired. O'Neill, Morales, and Catcher. Gil's actually become a friend, nice guy. Brilliant folks. Bigelow's my candle guy. Van Tharp, position sizing. And then for those that say, well, I want to, this is about income for me and not about growth, and they want to know how to make money for retirement in an era of really small dollars coming from their bank. Ronald Ronke writes some of these really straightforward, they're almost like little novels about how to buy options and for cover calls, rather naked puts, for creating income. Everybody knows this slide already. I have a lot of tools. I don't use a lot of tools. I use specific tools. My thought for the market, I added more bearish thoughts this week. Interest rates creeping up, the midterm elections. I think are potential concerns as we go into as this year goes on. I think everybody on this call knows that we've had a year, really since the middle of November, without much of a correction at all, and we're due, whatever due means. You know, the sell in May and go away phenomenon hasn't worked for the last couple of years. And one of the things that I took out of the stock market, Stock Traders Almanac, whatever it's called. Yeah, Stock Trader. I just turned around to look at it. It's on my desk behind me. Is that it works best in midterm election years. This is a midterm election year, so I would just tuck that somewhere in the back of your mind, that this is a year that we probably will see more. Not only we do from a time perspective, but the midterm elections, typically there's increased volatility and a higher chance of a pullback. Question came out about effective volume from Pascal Woolane. You know, I'm a huge believer of smart money, of institutional volume, and whether it's Woolane's approach with effective volume, whether it's Trade Guider, whether it's Anna Coling that Ron introduced to us. I should put her book up there as well. Which I think that big money drives the market. And, you know, it's funny. I had a hard time getting through some of the effective volume book. Then I was sitting on the plane one day next to a computer nerd, geek. I guess I'm sort of that too. And he asked me what I was looking at, and he thought that was interesting. And he read the book in about an hour because he's a mathematician, and it was a lot of math. It's a very, I think it convinced me of the power of big money. but it's not my favorite tool for using. I mentioned the Santa rally. Apparently it's judged from the, well, not apparently, it's the 23rd to the 3rd, and it's judged on the S&P 500, and the market has a 7 out of 10 chance of being up for the rest of the year when the Santa Claus rally is positive. I guess that's positive, but not very positive. And then we'll show a couple of, I like to look at these on a daily basis. You know, when Ian started talking about canaries singing in the coal mine, and then he put together the 5 or 6 high-flying stocks as a early warning sign. I don't think these give you a very broad description of the market, and they've been much more volatile, I think, than the market. However, they do give you an idea of what's going on with some of the go-go high beta stocks, the Teslas, the Amazons, the Facebooks, et cetera. And you could see here, you probably can't see very well because it's probably microscopic, but we've pulled back to the 17 and 8-day, which have come together. We've had a number of down days in a row. The volume's been relatively low, but I think the canaries are singing. Now, they're either going to sing happiness and we're going to bounce up today and the rally continues, or if they break down to the 50, then we may have some more pain to come. Now, when you look at this chart and you forget the last 5 days, you can see how much some of these stocks in this index have gone up, and it may be that we're just seeing, and I believe it because I've been contributing to it, tax gain selling, where I didn't want to dump some of my big winners going into the end of the year, and I wanted to dump them this year. It gives me a little bit more tax flexibility. If you look at the LLURs, this is a list. This is sort of the current generation of the Ronnie Index, GERM, or whatever we want to call it. I call it LLURs. Those that were in the October meeting, though, one of the things that we do in March and October is, and I love it because it used to be my only chance to go up in front of the audience, and I think people realize I'd like to hear my own voice, is I would go through and find 30 or 40 what I thought were leaders, and then I'd put them up in rapid fashion, and the audience would vote on in or out to put them in the index. To be in the index, you had to be, we only wanted 2, at most 3 from a specific industry. You had to be a leader. By definition, we wanted extended stocks because we wanted stocks that might be the first to roll over in a correction. And even though we bought them with the idea that they were probably getting toppy, and I think this is when we bought them, they really weren't, we really didn't buy them as much as tabulate them and measure them, realizing that when they rolled over, they might be indicative of the end of the market rally. And the point of these here is that they're actually doing better than the canaries, but they're more broader based. And then I can't resist the next couple slides, even though I did them last night. And I'm real-time watching your questions if they come in. I want this to be interactive. I'm still figuring out Magenta Trader, to be honest, and so I hate going live in it on the videos because I'm still having navigational issues. I used to use Best Choice, but Magenta is by far a better product. And my buddy George Lee, I hate to talk about how much people make and don't make, but this guy is he makes money trading. It's how he pays his family. He's a tennis pro and a trader. And I remember last year at this time, he was telling me and dumbing me how he was loading up on out-of-the-money calls of Netflix. If you remember, Netflix had dropped down to the 80s. And the reason why he was loading up on a couple of strikes out-of-the-money Netflix calls was because of the historic earnings seasonality that occurs in the January-February time frame, where most years Netflix has a big bump in the market. If you think about it, why? I bet people give Netflix as a Christmas present. Maybe what they do is they give a smart TV or a device that has Netflix on it, and so their revenue pops. Plus they're home, people are home, so they might be doing more video rentals and streaming. So there might be a good fundamental reason, and this is why he buys it. What I've done here is I've gone from November to April, and this is, the dashed line is today. This is what the stock has been doing. You can see it's really behaving nicely. in a very narrow channel with a nice uptrend. This yellow line represents a 10-year seasonality on Netflix. And, all the different, let me close my door because I think it might get noisy. All the different seasonality programs use different algorithms as to how to predict price movement, and whether they look at day by day, week by week, the date, and then they basically map out change by day, and then they come up with a predictive line. So what the program has done here is it's scanned for greatness. And what I see here is at some point I might expect Netflix perhaps to cycle again. Maybe this is it. Maybe I want to take advantage of Netflix here and start buying some out-of-the-money calls, because we are going into a very sweet spot for Netflix. If you had bought Netflix the last 10 years and wrote it between January 21st and February 17th, 9 out of 10 years you would have made money, and the average gain is 23.6%. Let me say that again. 9 out of 10 years, holding Netflix between January 21st and February 17th, average gain 23.6%, I believe. Now, I find that to be rather impressive. And, what does it mean to me? That 20% on a $300 stock is $60. So if I look at call options that are $15 or $20 out of the money, I buy low delta and I take one out of George's playbook, and I buy a lot of them, and if the stock pops, as it has the last 90% of the years, I make a big return. Google, is this a buy, sell, or hold looking at this picture? I don't know. Looks kind of toppy to me. I might go into one of Chris Wilson's views. He did, and I love his view, where he looks at relative strength of the stock, the S&P 500, the index, the bongos, to look for weakness and potential shortable candidates. What if I told you that the seasonality of Google looks like this? Do you want to be long Google here? There is no guarantee that the seasonality will work. You have 9 years here because Google's only been out for 9 years. Hard to believe that. And you could see that it's not great. It's 6-3, 6 losses, 3 wins over the last 9 years. Average down has been 8.3%. So is this enough for me to short? It's not as nice of a number as Netflix, but if I was thinking that I knew something that the market didn't know and I wanted to go long Google, I'd probably have a little bit of trepidation about going long Google. So Magenta 2, I highly recommend. You all know about Ian's meeting coming up in March, and as George announced, I'll be actually more participating there, whether it's good or bad. You know the website or you wouldn't be here, and you know about my YouTubes and enough of my advertising. Again, I am watching the question box. If anybody has questions, feel free. So let's shift a little bit. My thoughts on the market from last night, just to make a couple comments. We're in mild pullbacks in all the indices. They've been rubbing up against their Bollinger Bands. The dollar, in fact, let me just look at that before I jump to the next thing I wanted to do. Now, I don't have the red Ferrari. Mine is not nearly as pretty, but I'm married and my wife didn't want me to be that flashy. But I found there's a standard stock desktop background series from Microsoft that was pretty good resolution, so that's what I'm using there. So one of the things that I like to do, obviously, since I'm a top-down guy, is to kind of look at what the market's doing. And I just want to point out a couple of things. Again, I did this more detailed last night, so I don't need to go through it perhaps as much this morning. This is what I saw almost across the board on the major indices. And that was lower left, upper right. Let me make this one actually, you can see the dates better. So you can see when I say we've had a year without much of a correction. In fact, the ones who did best this year were the buy and holders, which is kind of wacko. And you can see that we have a tendency to ride up the upper Bollinger Band, so being at it doesn't mean it's over. But you know, if 95% of the time you're between these two bands, you're not going to spend much time above it. And you could see that the markets have pulled in a little bit. It's certainly very bullish looking. You're above the midline of the Bollinger Band. Nothing here says it's all over, but it also doesn't tell me it's all over from a correction perspective either. And we are, as I said, but I do think this is all much being mitigated by people selling their winners and banking their profits. Again, here is the NASDAQ. It looks exactly the same, a mild pullback. So I'm not going to show you any more of the indices because they all look the same. Here's the thing that I thought was really intriguing, and this was the dollar. Is the dollar different this time? I don't know, but I can tell you it broke out of the Bollinger Band, got above the 50 the last 2 days and held. It may run up to the 200-day moving average and bounce down. I still don't fully understand whether I should be bullish or bearish about the dollar. I think there's counter currents. I'm hoping that we've broken the pattern of the dollar goes up and the market goes down, because if the dollar goes up, not out of fear, but if the dollar goes up because of economic growth, then maybe that'll take the market with it. I'm going to be watching the dollar, and we'll see if it's able to go up or does it come right back into the chop that it's been. I'm not a gold or silver bull at this point. You could have made money in gold, especially if you bought the 3X last week, as the gold had a little bit of a move. But and as I've said on the webinars, I'd be much more comfortable with gold if it got above the 50, and much, much more comfortable if it got above the 200. And it's failed the 50 here. It's failed the 17. I just can't be bullish on gold yet. But one of these days, the gold bulls are going to have it right, and maybe it's right now. I listened to a guy named Dan Hoffman, or was it Dan Fitzpatrick rather, and he says this could be Jimmy Shaker Day, which is the day that if you don't do it, you're going to be regretting it. I don't think it's Jimmy Shaker time yet on gold, and here's silver that looks like it. So enough of that. So when I do my weekend review, it's all about top-down. When I start the market, I'm done with top-down, and I have to see what's actually moving. I use my top-down review to sort of gear up. So now we're getting about 7 minutes before the market. So what I'm doing is I'm wanting to get an idea of what's going on, and I'll jump back into HGSI, and I'll address the bongo question in a few minutes. Let's see what I want to look at. I'm going to start by going into seeing the futures, which you're probably looking at. And the futures are extremely strong. Well, that's a big word. Are nice and strong. The euro's up, so the dollar's down. Dollar's up versus the yen. Oil's up. Gold's up a teeny weeny. We had some lousy couple of days, so a bounce here. I don't think we need a bounce here. I think we could have pulled in a few more days, but we'll see. I'm still predominantly long, so I like making money, so I'm okay with that. We'll see if we can hold that into the market. Then there are certain things that I use routinely. Briefing.com is my source for news. So first thing I did when I got up this morning is I looked back all the news since midnight. And what do I see here? I see some early discussion of deals, potentially Liberty looking at buying Sirius at a 20% premium. Makes sense to me. Maybe I might want to load up the boat for that return. Probably not. I see some downgrades. I see upgrades. I know that Ariad got downgraded today, so it's likely to take a hit. It got downgraded to sell by Citi. I have some of that. I know that Celgene, it might be a good time to buy some Celgene. It's going to open up $3 or $4 down today. because of a lawsuit from some universities that want some royalties, but the royalties are in small numbers of millions. But I get a sense of what the market's doing, and I come down here and I really want to find I know you can't see this, I'm going too fast, I don't expect you to see it. There's usually something that talks about pre-market movers, and I usually want to fall down and find those because it gives me right here. It gives me a great summary of what's going on in the market. I know solar is going to open up strong. I see that some pharma company, PPHM, had a new drug, or had some good data, so it's going to pop. Any meta M&A, I know HGREG had horrible numbers, so that might pull down Con. It's probably going to pull down Best Buy because it's in the same sector. I also know that if those two pull down hard, it might be something to look for actually buying into, because sometimes I've made money when there's been sympathy and not a good reason to pull the stock down. Celgene, as I said, there's a dispute, so it got downgraded. I don't know why anybody would still own Unipixel. The numbers in HGSI were compelling from a earnings per share growth, but they've missed several times, and their COO left this weekend. That's a bad sign. So I use briefing.com, which is a paid service. The other thing that I use is, it's not paid. I get the basic Levitt, L-E-A-V-I-T-T Brothers newsletter for free. And in the Levitt newsletter for free, I can see Asian markets mostly down, China down Japan down 2.4, China 1.8, Indonesia 1.3. Wow, interesting that our futures look so positive considering how bad the Asian markets were. Dow flat, oil up, copper down. Any headlines? The men's wrap clothing stores having a fight. GE buying a unit of Thermo, who cares? T-Mobile, Spectrum. This is big. Chinese government indicating continued support for the solar industry, according to a report on Saturday. That's a big deal for me because I own about 5 solars that I bought in the last 10 days because of strength in a wolf pack. All right. Now I'm going to show you something you haven't seen before, most likely. This is a product called One Option. And I go into this and I look at bullish movers and pre-open gainers to see what's moving. And this is looking at dollar change, Solar City, FedEx, Joseph Banks, Boeing. Here's a solar 3D printers. You got a bunch of them here. You got X1, you got Stratasys, you got Voxjet. Hope you got DDD because I got a bunch of that one. Don't understand why they're fundamentals, but I certainly like the stock. This program is called One Option, the number 1 option, and probably the best thing it has that someday soon, I hope I won't need it because George will give it to us, is a bunch of built-in scanning things that you can do today. So pre-open gainers, I see the pre-open gainers. I can see where the pre-open losers are. Celgene, as I mentioned, in a lawsuit, some weakness there. Here's that HGREG. Alexion selling off a little bit today. Noah Holdings is one that I used to own, which is a Chinese money management company, asset management company. Adobe down a little bit. Best Buy, some sympathy selling, as I mentioned. Now, throughout the day, I use this for scanning. They also have some real-time trading systems that I will link into as well, but that's not what I want today to be around. Then I will jump into Tradestation and make sure I've got my Tradestation set up for the market open. And what I've done in Tradestation, thank you, like a symphony of sounds, is this is the screen that I live in. And what I'm going to look at, not only am I looking at, I got the indexes, futures, there's some overlap, the direction 3X bulls and bears, and then I have about 600 stocks that have me interested. Okay. And what I'm looking for are the things that make me want to do something. So I'm looking at, this are daily charts, last price, net change, percent change. I'm looking for pocket pivots. Now, pocket pivots on most of the scanning programs, including mine, are going to pick up a volume movement, not necessarily the moving average movement. So I actually have to look at charts, but I use this as a screening tool. I like to look at the volume today versus the average, getting an idea, because to me, one of the things to scan for and why pocket pivots work for me is I'm looking for big volume days to drive my attention. I'm looking for green candle lows and red candle highs. It's a little early for that. Ice hole failures would be stocks that fail at the 50-day moving average as potential shorting candidates. And I'm a big fan of George Lee and before him, David Elliott, and I'm looking for stocks in a squeeze. That's one of my favorite setups. As those moving averages are coming together, the Bollinger Bands have tightened inside the Keltner channel, creating a coiled spring effect. And then I'm looking for stocks that break out of that squeeze. And I'm looking for mobile breakouts or breakdowns. I can see that early on, Pandora and Storm Ruger look like they're having some mobile breakouts. So I can't buy, in my mind, RGR, and it's just stupidity, but it's just the way I am. I don't want to buy a company that makes its money creating guns. I'm not a flaming liberal. There's probably not very many liberal bones in my body, but I just don't like them. But that said, then I look at my charting platform, and this is different than my nighttime programs. This is just to show you what I'm doing and then answer questions as we go. I'm looking at a 60-minute chart, a daily chart, and a weekly chart. I've got a couple different MACD programs in here. One of them here scans for divergence. I have my high jump, which I'm really only using here on the daily and the weekly, and I'm looking at the high jump value compared to the highest value in the last 200 bars. I'm only at 50%, 74%. I've got price bars here on the daily. I've got some algorithms that draw the trend lines up here. The purple dots are mobile breakdowns. The blue dots here are, the big dots are mobile breakouts. The little red dots are PSAR, that would be a sell. The little blues are PSA buys. And what I'm looking for are mobile breakouts occurring with a PSAR in a squeeze. And when I see a squeeze, I should see these little red dots. Now, I actually had a new indicator created for me to sort of make my life easier, and I call it the George Lee trigger indicator, because the George Lee trigger indicator, all right, I did that wrong. All right, I'm not going to do that in real time, but I basically created a indicator that includes squeeze and a mobile breakout at a PSAR reversal all in one, so I could plot a big cross on the chart where I need to get interested. So RGR on a daily chart looks to me like it's facing here, ran up, pulled back. I see a mobile breakout, a PSAR flip, and a squeeze. And now I do heavily rely, and I'm going to get to the bongo question that came in, I heavily rely on HGSI for my charting. And I got to tell you, you know, I am a homer. I know I'm a homer. I know I talk about HGSI all the time. I've been told that when I do other talks. They used to suck on charting. It's not my favorite. I go right to this for a chart. And what do I see here? I see that if I bought gun stocks, I'll probably be buying RGR right now at the open. Why? Because, go back to my scanning. It's up. Well, it's only up a few pennies here, but it's got the mobile breakout from the squeeze. It looks great on the chart. there, and you see the Bollinger Bands come together. There's a squeeze. The blue bar gives a pocket pivots. I had volume coming in on low days of the market in a kahuna. So I see a stock in an uptrend, pull back to the major moving average, and through a kahuna on probably was Tuesday because market was closed Wednesday. I'd be looking to buy this. Now that I said that, then I would move it into my looking for triggers category. And I might just put on this to buy it if it took out the high of the prior bar or the current bar. But this is the kind of stock that I want to buy. And so I'm sitting at my computer throughout the day. I've got bells and whistles and alarms that are going off. I get little notes from one option of things that they're recommending to buy. And then I go into HGSI to look at them. So what else do I have here? I've got buyable gap ups. Now, I love buyable gap ups. Why do I love buyable gap ups? Because if you watch my webinars, you see that they work. And how do I know that they work? Because the buyable gap ups, I look at every week on a group performance analysis at the buyable gap ups to see how they did. So wouldn't it be nice if you knew who they were before they actually showed up somewhere else? So let's scan for gaps. So these are the stocks that I have that gapped up, and their gap up percent. Now, if you think about a buyable gap up, it's not how much they move, but rather how much they move in relationship to their ATR. So I've got a 40-day ATR, and to turn green, you've got to be 75%. Your gap has to be 75% of that ATR. Now, you can change that if you want it to be a bigger amount. Your volume, I look back 50 days, and the gap day has to be 150% of your 50-day average volume. And then I filter it with a 50-day smooth moving average, and I do that so that I don't look for buyable gap ups below the 50-day moving average. So I see a number of potential candidates. Some of them already look interesting to me. So I might be looking at all of these. I love McKesson. It's an expensive stock. I don't know if I included it last night. I worked for and sold businesses to the two competitors, Amerisource and Cardinal, and I was always jealous of these guys. The three companies are all outstanding. They're all operational magicians. They buy something from the manufacturer and they sell it to the user for less money, and they make money doing it. And I figured out their secret sauce of how they do that. It's totally legal. What makes McKesson different is they bought a company called HBO, not the television station, but a technology company back in the 90s, stumbled a lot with that acquisition. And you could see another of my favorite patterns. It's run up here. It's gone sideways to the 50, caught up. You got a bunch of things converging. I'm almost certain that if I go into my triple chart, type in McKesson, there's my, the PSR flipped several days ago, but I got a mobile breakout on the daily, a mobile breakout and a gap up on the 60-minute. I'm viable on the weekly. It's an expensive stock, but it's the right kind of a setup that I'm looking for. And then when I start to see that gap, I'm going to probably put that on my watch list and see where it starts to level off. I'm not jumping out and buying it this minute because this mess. Okay, this is 60-minute. Now I might go and drop this down to a 15 minutes and see if it doesn't help me either. This has all been, well, the markets have been open two bars. Maybe I'll go down to a 1 minute. All right, it's going to load data. So no, I'm not ready to buy this yet. Now, if I start to see this level off and start going up, I might treat this as a buyable gap up and set my stop in this range, but it's going to have to get above this bar, probably above it here, for me to want to jump into it based upon how I trade. So what I'm trying to show you is how I'm looking at the market when it opens. Now there's a question about how I use the bongos. Depends on how I'm trading. I don't like the fact that if I follow the bongo rule, I shouldn't be buying anything that's red on the weekly. And therefore, I would pass this. And if I was a conservative investor that doesn't have the opportunity of being in the market real time on a daily basis, I probably would not be nibbling at something that was bongo red weekly. But I recognize that this has been a relatively deeper, it's a $10 pullback here. It's gone on long enough that the bongo, so there are people out there like a Dave Steckler that might not buy. There are ETF trading systems. I don't want to put anything on Steckler. He's a smart man. There are people that follow the bongos and only buy when the daily and the weekly are green and sell when the weekly goes red. And I'm not that kind of a trader. I'm a more active trader. I'm bothered by all the red here, and that's something that might make me hesitate or keep my stop short, but it's a pullback in an uptrend down to a major moving average in a squeeze breaking out. It's what I like to buy. A lot of folks wouldn't touch it. Now, I created something for myself, a fast weekly bongo system, and I know people are going to ask, so, because I didn't like waiting. So what I did there is I made a 5, 8, and a 13 on the RSIs so that it works faster than the weekly, which is set at 8, 14, and 19. And whether or not that's fair or not, and whether I'm cheating, who cares? It works for me. But you could argue not to jump into this because the bongos, when it's clearly a stock that's pulling back, I am bothered that the fact that the weekly bongo is still red, and I am a little bit I'm a little bit mitigated by the fact that the 2-day force turned green. I love the pattern. I'm going to be watching it. Now I'm seeing a market where Celgene is down almost $6. Sort of saw that happening. I'm seeing that DDD is down $2, which is interesting because it was up pre-market. And I'm seeing the solars saving my portfolio this morning. Jinx Solar, for example, up $2, which I have a lot of that puppy. I have a lot of Celgene too, so they'll mitigate some of my disaster there. But I don't really. It's not going to make a difference today. It's a small percent on Celgene. All right, so I'm going to go back to my favorite screen. Keep your questions coming. Big radar. So these are the ones with the big gap up percent. Here's your volume percent. All right, I know it takes 150% to fire. Look, I'm at 61% here, and the market's been open 15 minutes. Do you think there's a good chance that whatever XPO logistics is, that it's going to fire? I think so. So what am I going to do? I'm back. Take a look at XPO. I always like to go here because this is the chart that I'm most familiar with. It better have good earnings because this doesn't make money. See, this is where I get burned. I don't like buying stocks that don't have the fundamentals to support it. Maybe there's a story here. It's had big revenue growth. Of course, I'm going to try to kill my computer by opening up too many things, but this is one where I've got to go into Mark Smith. There we go. As I said, killing stuff. There you go. I'll get my free username, but I don't think you'll see my password, so I'm okay. Yes, my password is not George Lee. And I'm going to do a very quick peek into too soon and see if I can find out anything about this XPO business. Oh, don't do this to me. All right, we're not going to do it on that computer. I would look at earnings here because it is, I don't understand this, but look, it's all green. I got multiple pocket pivots in a row, big revenue growth. What industry is it in? Trucking, because trucking was strong. Air freight logistics, we saw FedEx was strong, free market. I got to go find out more about this stock because it's breaking out whatever it is. If I go into my 3 charts here, put in, was it XPO? Has everybody lost my screen, George?
I have. I see this Marcus Smith. That's the only thing I see.
Okay. Let me know if it come back.
There you go.
Okay, I'm sorry, guys. When I shut down Internet Explorer, it did something. So I wanted to go back and look at that XPO. And, you know, basing on the daily, pull back on the weekly, moving up, big gap up today. Had a mobile breakout on Friday with a PSAR flipped over. Have met the criteria for a viable gap up today, at least on the 60-minute chart. So looking at 60-minute volume. I mean, this is a chart that looks to me is go into briefing.com. All right, thank you. I have so many toys, I don't even know when to use any of them. Let me see if I can get back into MarketSmith. I haven't figured out how long I'm going to do this for today. This is what I do all day long, so it doesn't really bother me, although I'm not going to be ordering stocks when I'm talking on the phone with everybody. But I'm certainly building up my watch list. Okay, thank you, Steve. So Steve Meyer came out. There's a good news story. I'm still having this problem. All right, I don't really want to go and fix this now. So they're in. I got to tell you, I'm interested in buying this on that story. Why? We're in a market now that people are buying the acquirers. I was talking about it with George Lee yesterday, so I'm going to write this down on my to-do list. We'll see where it settles out. Obviously, with a big red candle here, I'm going to want to drop into a shorter time frame and use the shorter time frame perhaps to look at an entry. And I want to see this start to base and level off before I get there. But this has been a weird market. Usually the company buying goes down. You look at SLXP when it bought Santeris, and it went up more than the Santeris did, and we've seen that with a lot of them. The HGS screen you are using, everything that I use in HGS screen is stock. If you can't find it, TR, email me at jeffrey@hgsi.com and I'll help you find it. What I use in Tradestation, I'll talk about how that's available in a few minutes. So I'm looking for my Bible gap ups here, which will fight or free, and I'm now up to, so right now, still not making it. We're at 48%, so we're halfway there on the volume. The SMA filter is above or below the 50. I like to play around with MACD divergences, so you can ignore these two, and DMI flip-flops. There's a good chance that a guy named Jan Arps is going to, you can go to Jan Arps' toolbox, is going to be, George, I forgot to record this, hopefully you are, at my meeting in New York, but he has some great indicators that I use for looking for pullbacks, trending stocks, etc. And then I'm still figuring this one out, to be honest with you, but I can now scan for stocks that are meeting my criteria for 3 different time frames, for 60-minute, daily, and weekly on the George Lee triggers, which would be mobile breakout from the squeeze with a PSAR flip, and you can set your formats. So these are obviously not HGSI. George has assured me, pressure, pressure, pressure on George time, that before someday I'll actually see mobile breakouts and squeezes. I think that will just seal the deal, and I won't need to, I can eliminate some other software because the big benefit, and I'm going to show you why, one of the reasons why HGSI is so powerful.
I am recording, by the way, Jeff.
Good. So let's say that I want to find out how many stocks end up the day with the Bible gap up. Now, the beautiful thing with Tradestation is I have formatted a scan, and the scan goes to all symbols. I set my price at 5 and 150. Maybe I want to start lowering that to 2 because this has been a market of little stock where the cheaper stocks have actually been doing fine. And then I look for Bible gap ups. And unfortunately, the radar screen for trades, or the scanner, is an end of day tool. So I can do that and I can run, or I can just go into HGSI, go into the designer view, and it's done for me automatically in Woodward or Morales and Catcher. And these were the Bible gap ups that met the criteria in the scan. We'll talk about YY in a second. That's one of my also getting clobbered today, big holdings. This has also been a market where it's turned around a lot as the day has gone on. So I can get it that way, or I could have scanned it. Now I'm trading, and it's still waiting. It's a different universe because the 2 and the 150, so I'll get more stocks this way. But HGSI allows you to scan things. They do things that are automated, and you're not waiting all day for the scan to happen. Part of why I'll always have an end-of-day program. And if somebody has a better pro than HGSI, I want to see it because I don't believe it. EdgeRater adds to HGSI. It's not a competitor from my perspective. I'm trying to answer any questions that I see. The guy that commented about Jan Arps, send a note to Keith Harris, who is the guy that you always probably communicate with there when you buy stuff, and let him know that you're going to be at that meeting and you'd love to see Jan there. I think that will be extra encouragement, will be a good thing. For Thinkorswim users, I can do, and maybe next time, for the sake of time, I'll do it, all this in Thinkorswim, but I think there's certain strengths to this program. So again, I'm scanning throughout the day. I'm looking for Bible gap ups. There are none yet. I'm looking at the stocks that have gapped up and their percentages. I'm looking at other signals that are going to make a difference. What do you use in setting stop losses? All right, Joseph, that's why we're doing the meeting in New York. So it's a great question. It's more of a novelette, and I'm not going to be able to answer it all. But here's the question. What strategy do you use in setting stop losses? For example, 2% to 8% range. How much or how little room do you give stocks to run? What are the variables for setting each stop? Do your stops vary depending on your position level, initial buy point, level of profit, and is it done in concert with the state of the current market? Well, yeah. Okay, yes, all the above. So here's what I do. First thing is I got to figure out what am I doing. I don't apply the same stop rules to Celgene as I would to buying a new stock. So when I buy I start everything as a trade. I have learned this year, which may not be indicative of years to come, that it's pretty nice to let some of those trades turn into longer term holds. So I have in my portfolio a number of things with some long-term pictures on them. I have a long-term position in Jazz with a cost of about $12. I know that Bruce on the web probably has it cheaper. URI, United Rentals, about $10. Bank of America, about $3. Delta Airlines, about $4. Celgene at about $45, I guess the biggest position that I have. Those move out of my active trading category. They sit in a specific account, and I have a sell them all button that I have if I think the market's going to roll over, so my tone of the market matters. But I'm willing to give those long-term investments a bit more of a run in them, and that's just because I've always kicked myself when I've sold some of those. On the other hand, a recent purchase I bought was JK Solar. I mean, I bought this last week, and it's had a nice move since I bought it, and not a big position. So let's look at JK Solar, and sort of my internal rule set on stops. This is what works for Jeffrey. I have no idea what works for you. I have a big trading account. I can absorb a $100,000 loss on a day and go out to dinner and not have any ill feeling at all. I can absorb a much bigger loss, but I feel better on days I make money, let's be honest. If I buy something, I'm buying it for a reason. I bought JK Solar. Hopefully you can see my screen here. Why did I buy it there? Because it gapped up off of free parking, the 50-day moving average. That's why I bought JK Solar. So how would I handle the stops on that position? Well, the first thing I'm going to do is I'm going to look and see where support is. So I know support is, let's open up the box and make my life easy. Support is on that 50-day moving average. So the 50-day moving average is $27.68. I bought the stock, say, somewhere in that middle of that range. Say I bought the stock at $29. It's $1.32, or about 5% between where I bought that stock and the 50-day moving average. So my initial stop here is not a number percent. My initial stop is going to sit here underneath the 50. I've been using the 65-day exponential for a lot of stocks as my stop, and it's kept me in YY even though it's pulled back some. I'm not going to use it here because the stock is, I bought it at a good buy point, and that 50-day, if it violates the 50, then it's broken down. So I'll set it a couple, maybe 30 cents below the 50 as my initial stop. If I don't have such a pretty place to put the stop, I'd probably put the stop at 8% on the buy. Once the stock is up 8%, I'll move my stop to a break even. That way I don't lose money. Once the stock moves off of that point, I will put a average trading range controlled chandelier stop. I have this automated in Thinkorswim and automated it in Tradestation. Let's see if I can find a stock that where this will work on. Oh, okay. So basically what a chandelier stop does is, I got to find one, let me see, we copy this to make a new window. Copy window. So to me what a chandelier stop does, it's kind of like a trailing stop, and like a trailing stop, it never, what's the word I'm looking at? Like a trailing stop, if you have an 8% trailing stop, you never lower your stop. The stop only goes up as the stock price goes up. In a chandelier stop, I actually vary what the percentage is on my trail, automated, so that as I get closer and closer, as the stock goes up and up and up, I actually, it's not a trade, not on an investment, I tighten up my stop and take my profits. I don't have a profit target where I automatically take out a percentage like some people do, but what I am doing is I trail it up with a chandelier stop. So I start with a stop that's dependent upon why I bought it, usually looking at a moving average. I go to a break-even stop as soon as I can on a trade, keyword on a trade, and then I apply a chandelier stop when I'm up about 10%. And, you know, at some point, like a Celgene, I may stop and move it into more of a human-controlled stop. Now, Celgene's getting killed today. It's down 3.83%. This is below, well, I shouldn't say that. Maybe it's a big deal. It's about royalties to a university. These are days that I like to buy on weakness, and I might be nibbling some there today, or at least doing a trade position of Celgene, unlike my longer-term position. One of the things that I want to do with George is spend a lot of time on position sizing, stops, when to buy options versus when to buy stocks at the upcoming meeting. Back into my radar screen. It's at about an hour, so I'm going to answer the questions. I think I've got all of them except for the last one. But here I am. I'm just going to be sitting here. I'm at 61% volume here. Here's one, Pandora. For the life of me, when I can do things for free, I wonder why I would pay for Pandora, but there must be a reason. So I'm looking at that. I see that XPO has now met pocket pivot volume. Again, buying things in the setting of acquisition seems to work these days, and this looks very pretty right now, at least here. McKesson's still up 82 cents. Now, didn't bring him down here, but I have the stocks that I looked at yesterday, see if anything there looks interesting. JK Solar, Harmony International, MEI are stocks that met one of my favorite screens that I'll look at. Harmony International is an interesting story in that Harmony International, I think of them as a stereo company, but Harmony International is a they make the radios for the car. So obviously it's breaking out. So somebody asked me about opening range indicator and Tradestation. I have an opening range indicator. In fact, I haven't spent any time purposely talking about this window here, except I was looking at it on the stop side. I have an auto trading platform that I put the stock in this thing. It trades automatically. And one of the things that will kick off a trade is an opening range breakout, and you can control the opening range. Story a little bit. Back on Harmony International, go back to HGSI for a couple of seconds. And I'm not ignoring your question. My favorite person in Boca. Actually, the only person I know in Boca, but you're still my favorite person there. Pull back to the 50. So this made it as my list as a pullback waiting for a signal. And what I mean by that is I don't know when it's going to jump off that 50-day moving average. I certainly don't like the fact that everything is red there, but I do see that 50-day moving average with some porosity has been a good place to buy. I see that it makes money and it's got some earnings per share growth coming in. I can see it pays a small dividend. I like this guy, Dan Fitzpatrick, a lot. So I don't like all the red here, but a signal like a pocket pivot, a kahuna, a buyable gap up, a belt hold, bullish engulfing pattern, these are all things that I look at when I might want to get in. And so what am I seeing here? Let's go into my big chart. And now I'm going to go into, no, it's already here. So I've got a mobile breakout PSAR flip on the 60 minutes. I've got facing within the trend line at support here, but the PSAR is against me on the daily. That bothers me. The weekly looks good. I'm going to leave it in my watch list and see if it does anything and gets me one of those signals. I'm not jumping into it. Somebody asked about gold. You know, gold is a trading vehicle right here. I don't think it's a long-term investment yet. So when we looked at gold earlier, and I'm just looking here at GLD, my comment was, I don't really want to get into gold as an investment, anything more than a day or two trade, and for that I'm going to trade the 3Xs until I get and I live above the 50 or better above the 200. Because until gold can get above the 50 and stay there, it's still in a downtrend. It doesn't mean you're not going to see powerful up moves in gold, and maybe for all the right reasons as we think the economy is turning around. In fact, in the last 3 days, if you bought on at the open and sold at the close, you know, you had a 2% change in 3 days. That's not because over the year. I'm not ready for gold from an investment. It may be a good trading vehicle, and you can see it certainly had a nice, on the 60-minute, it's moved up nice to the mobile breakout. We'll see. So if my stop moves up 60% to 100%, I typically move stops up. Okay. So the question is, so if your stock moves up 60% to 100%, do you typically move your stops up from, say, 7 to 8 to 1 to 2 to secure profits? Is that right? It depends. If I'm auto trading and not at my computer, I will automate the stops. I don't know if it gets to 1 or 2%, but the multiplier on the ATR that I'm willing to give my chandelier hanging off the bottom gets shorter and shorter, and I get taken out of stocks with small pullbacks in that long run. On my trades, absolutely. Absolutely. As I mentioned earlier, there comes a point in time that I will take stocks out of my trading category and move them into a position. I love when I do that. They're fat with profits, and they're stocks that I think are long-term winners. Sometimes I make a big mistake. HiMax. I bought into HiMax at about $4. Come on, HiMax, where are you? And I sold out on HiMax. In here. I had a PSAR flip to the negative and a mobile breakdown. I watched it, wanted to get back into it, and I didn't, and it rocketed to the moon. This was a year where you're better off not selling anything. I know I didn't really say that. It's a year that we just ended where it turned out you were better off pinching your nose and letting your winners run. 2014 and 15 may be different. So this was an investment, a trade, not an investment, and thus I got stopped out and I didn't care. On the other hand, let me put Celgene up there. And, people know, whenever you hear people talk about what they own and what they don't own, it's a bunch of baloney most of the time. Celgene's now down $8. It's only 5% down. Still, it's interesting. I mean, maybe this is something that I'm going to have to go and figure out. I can see on the weekly chart, it's still PSAR buy. It flipped on the daily, which is bothersome. We'll see. I'm going to look at it more. But what do you do if you're into Celgene? When do you sell Celgene? I think that Celgene is going to be a leader in the market for time to come. I think this was my, what was my call that I made on Celgene? I think this is where I made that. I went on the website and I said it's time to load up the boat on Celgene. It was one of these two dates. I mean, Celgene's in a big bull run. It's a leader. I know the company well. I'm going to have to seriously go look at it because this is a much bigger drawdown than I would have expected. I think part of it might be people are using this as an excuse for profit taking. But on my Celgene, on my Gilead, they all look ugly today, I'm afraid. My DDD, there are a number of things that I'm making my decisions based off of the charts, off of a specific number. I mean, these are frightening charts on some of these. These are weekly charts, by the way, because of the almost parabolic nature. And that's just been the market we've been in, and it just tells me that on some of these I've got to be a little bit nervous. But I treat my long term. So I know I've just rambled, and I apologize for rambling, but I feel that I don't feel this way. I do this. I treat my long-term holdings, my investment holdings, different than my individual trades. And on these long-term holdings, like the Celgene, I'm going to have to spend some time looking at some information and try and determine, do I need to lighten up because of this big down day, or is it an opportunity to buy more? So let me look back at the questions and try not to ramble so much. I'm looking at an hour and 15 minutes. I'm probably going to stop shortly. Can you discuss shorting or, well, you know, I'm not a good shorter, let me be honest. I get nervous because I know you can make money really fast shorting, but it's also sort of infinite potential losses. But I love buying puts, rather. I love selling puts in uptrends to make cash, but I'll buy puts on things that I think are taking a dive, and I'll buy puts preemptively when I think the market is getting extended. So how do I use my indicators? Well, first thing is, let's take a look at Google and show you what I mentioned earlier. This is a Chris Wilson, not Chris White chart. So what Chris showed us, and actually I listened and made money off because of it, is that he looked at things such as price, and let me open up the window of what's in here. He's got bongos, kahunas up and down. He's got price, a 21, a 50, and a 200-day moving average. And then down here he's got the relative strength of the comparative versus the S&P. So this is here Google versus the S&P 500. And in blue, he's got the comparative versus the S&P moving average. And so it's the moving average of the wedge. So it's sort of like the smoothing of the red line. And he's got the S&P in the dashes. So this is a daily chart. And they have a weekly chart. And what he showed fairly convincing at periods of tops, and I'm going to look at the weekly, I think it's easier to see, if this price crosses below the moving average here, in the setting of perhaps another bongo or kahuna down, and breaking below the moving average of the comparator, I might be getting into a short setup. If I look at the weekly, and Chris will be at our meeting, not nearly ready for me to short Google. But I will look at charts within HGSI, and I'll look for charts breaking down here. Now, I might go back into HGSI and I'll go into scan into the warehouse view. I'm going to go into all securities. And I'm going to go into Woodward and Brown. I'm just going to look at them under the, all right. Things are changed down a little bit because George has been trying to make it easier on folks, done a few changes, so I got to look for where things are. I'm going to go into the elder force rules, and I'm going to look at, I've got Rule 4 and Rule 2. So let's look at Rule 2, and I could start to build potential stocks to short. I probably want to thin this out and eliminate preferred stocks. But these are looking for stocks that might be rolling over. So let's look at a couple. Let's look at there's gold. Let's look at KBR and BIG. So I'm going to scan, and I'll just look at some of the characteristics. I've got some bandwidth, and you could see this is what we're talking about. We're talking about a stock, and I know that breaks through its moving average. This was the place here to short the stock. You got your kahuna here. You could have shorted it here. You can see you broke below the moving average here. You failed at the moving average here, and this was a great opportunity to jump into the stock short. So I use these stocks. I'm not sure how I can scan this picture. Maybe George can tell me how to do that. George, I had a question about getting Chris's charts in the add-on. I'm sure Chris would be happy to. He gave it to everybody at the HGSI meetings and PV, so I'll ask him and then we'll put it in. So I'm not a great shorter, as I said. I'd rather look at buying puts and being able to sleep easier at night, because I think getting that wasn't good. I just went to a black screen, so that might be telling me I've done too much here. Let's see. George, can you see me anymore?
I can see you, but there you go.
Okay. I think I probably overdid my internet access. But I'd rather, as I said, buy the puts and sleep at night. I think at this point, since my computer is telling me it's tired, I'm getting tired, I need to go make some money. Any last questions? George, you want to open up the lines?
You want to open them all, Jeff?
Yeah. George, unmute me. Okay, thanks.
Yeah.
I'll answer any last questions. I just wanted to put out there about our meeting. That's the problem. I'm hearing an echo. Here's the meeting, the contact information. Would love to have you. It's going to be like this for 3 days in a row. I bought me now. Am I still giving the echo? All right. I bought an MSI notebook which has 2 terabytes of an SSD and 32 gigabytes of memory, and I still just maxed it out here with programs. Can you hear me now?
Yes.
Okay. All right. So any other questions? People put it in there. Well, George and I will talk about this format as long as I'm unemployed, which hopefully will be forever, because I'm enjoying not working. then I'll be happy to do these again. I like doing these in the market. I guess the last plug is I am going to make my indicator package available for Tradestation. It will include pocket pivots, viable gap ups, red candle highs, green candle lows, failures, squeezes, mobile breakdowns, and breakouts. It cannot have the trigger because the multi-time frames, I had to license that from somebody that doesn't allow me to share it. The best way to get it is to come to the meeting, and you'll get them for $250. There'll be a whole lot more money from when I decide to sell them as individuals. GL, come to the meeting. It's going to be a great time. Those that haven't heard George Lee, he's great. Love listening to him. I download he does Magenta videos. I actually was watching it this morning before we started. Thanks, everybody. Thanks, George. Have a great trading day, and we'll see if Celgene gives me an opportunity to buy more on a bounce or if I'm bailing. Good night, everybody, or goodbye, everybody. Thanks.